In the last 24 hours, Bitcoin has broken toward the downside, rejecting from the 21,300 to 500 horizontal resistance range. We're going to go ahead and take a look at the charts today, discussing what we think is going to happen next. Let's get in. Okay guys, welcome back to the channel. Thank you for tuning into today's video. We're going to go ahead and discuss Bitcoin today, talking about the short-term price action, discussing the rejection from the 21,300 to 21,500 range. We're taking a look at the broader markets and of course a macro. Now, we are rejecting from this horizontal resistance range, which of course was marked by a November high. But like we've said this whole week, although we do expect a rejection, which we are currently seeing, we do not expect this rejection to send us to new lows. We do think it's going to be a healthy correction, potentially come down a few percent, reset, and then move back towards the upside. But anyway, guys, sorry for not being here yesterday. I had an absolutely crazy day. I had my bank account hacked. Whole bunch of transactions came through my bank account, which are obviously unauthorized. Had to sort that out. And even more importantly, my girlfriend's sister got rushed to the emergency room. She actually had to get appendicitis removal. So the surgery was taking place. So pretty intense day, guys, but everything is all good and we're back at it. So let's go ahead and dive in. Now, before we do, smash the like button, hit the comment button, subscribe to the channel. We do daily videos of Bitcoin, technical analysis focus, structural analysis focus, giving you only the data. We don't rub in emotions. We don't care about anything else. We look at the facts, the charts, the data, the technicals, and we tell you what those are telling us. We also do have a Telegram channel, the second link down below. Get access to all our charts, updates, analysis, information, and more you will see over here. We also do have a VIP channel. This, of course, has all our trading signals, etc., etc. You can see all of our trading signals have specific entries, targets, stop losses, and much, much more. We also do have our VIP group chat, which you'll get access to if you are a VIP member. Let's go ahead and start off the market data. So, what are we looking like so far for the month? We're 25% in the green. Again, that is pretty good. 25% in the green. We have come down about 3% since that high, around 28%. We are seeing 24-hour volume push up to $116 billion. Of course, as we see liquidations come through, we're naturally going to see volatility spike and volume push upwards as we break up, or in this case, downwards from structures and supports. Okay, a lot of people place these stop loss orders or buy orders underneath supports or at supports, and that triggers the volume to push up, the volatility to push up, and of course liquidations are up 236% as a result. Volatility at 1.74, and like we said before, liquidations pushing closer to 250, with the majority of these liquidations being in the long positions as we actually broke down. Nearly triple the amount. We have $184 million in long liquidations, where we've only had 60 million in short liquidations. Let's go ahead and talk about the broader markets, then we'll come and talk about Bitcoin in the short term, and then go into the macro. So a lot is happening here, guys. If you've been paying attention to the channel, you would have known that the DXY has been in a descending channel formation for quite some time. We've been talking about how we could potentially see support around about this level. We have in fact seen that now. We are finding a fair amount of support at this level. We would like to see a push toward the upside over here to complete this structure. If the structure actually does develop and complete, it actually will result in a move towards upside. From a measured move standpoint, we can just take the width of the channel, apply it to any particular breakout point, and we can see that takes us to around 106, which is the next major resistance zone towards upside. Obviously, going up on the DXY would be very, very bearish for the S&P 500, for the traditional markets, and of course for Bitcoin. So we do have to keep our eyes on that, because if the DXY does climb upwards, we can potentially see the markets come down. So that is obviously not a good sign. Looking at the Dow Jones and S&P 500, pretty bearish over here, guys. We obviously failing to create a high over here on the Dow Jones. We actually failed to get over our previous high that we printed in November, the November 30th high. This one topped out around 34,480, and it's currently pushed back in to our massive support range. We're not looking very good here. If we do lose the low that we created here, we are actually going to continue down to 32,000. So the Dow Jones is actually looking pretty bearish right now. We still need to create a high over here, break over 35,000, to see any sort of bullish momentum kick in and the price action turn bullish. S&P 500, if you remember this chart we posted a few days ago, we can see over here, this was in comparison to what it is now. This is 2 days ago. You can see the S&P 500 actually did get rejected from this level. We're pushed back down to what we would call support now. This red area over here is actually a horizontal support range. So we're currently within a support range, just retesting the top of it. Again, losing 4,000, rejecting from the downward sloping diagonal resistance. It is definitely not looking too great over here for the S&P 500. We do have a potential uptrending support line over here that we could potentially come down and find support on. But even then, that's going to push us below the support range and likely reject and continue lower. So again, we do need to break through this diagonal resistance. We need to get above 4,100 to see any sort of continuation upwards. Otherwise, we do have that risk to come down. This is what I've been saying the entire week, guys. This move has been phenomenal. In fact, we were on top of this move. We were telling you guys the entire time, we're in a macro falling wedge. We are likely to break to the upside, a falling wedge structure. We even told you on the short term, we break through these triggers, we expect higher levels. We break through 18,000, we expect higher levels. Break through 19,200, that is a trigger for a long towards the upside, okay? But we also were aware on the short term, if we zoom into the short term, the trend was weakening. We saw glimmers of weakening in the trend on the hourly, guys. On the 30-minute chart, we saw that trend starting to weaken. We saw volume decrease, okay? We saw the momentum start to fail, okay? We look at like the hourly chart on the RSI, we can see we saw cracks in the momentum, okay? And we have now seen, is it hourly or daily? Sorry, my bad. And we have now seen a breakdown on that chart for Bitcoin. It might have been a 4 hour, sorry guys, here it is, a 4 hour chart. We saw this uptrending line here on the RSI. We saw that breakdown on the RSI a few days ago, about 24 hours ago, a little bit over 24 hours ago. And we said, you know, we're losing bullish momentum. We are likely to move towards the downside. We have massive, massive resistance above us, which of course was this local high over here. Not only that, the Dow Jones, S&P 500 at resistance and the DXY was at support. You put all of those things together, the likelihood that we were going to continue through as resistance became less probable. When you trade, guys, you have to put yourself with the probabilities, with the statistical advantage, and therefore shorts were more favorable to be taken at the 21,300, 21,500 resistance than longs, and that's exactly what we did, and we have profited quite a fair bit from it. The question is now, how low is this move going to go before we move back upwards? Because we do believe we're moving back upwards. So let's go ahead and answer out of the short term, and then we'll zoom out to the macro and discuss the macro. So look at the short-term structure. We can do a few things. We can look from a measured move perspective first and foremost, from a structural stance. Let's go ahead and remove some of these indicators. From a structural stance, it looks like we have actually completed the breakdown in terms of the measured move. So we'll go ahead and take our low to our first retest over here, high over here, which will be our first retest. We can go and apply that to the breakdown point. It looks like we've come about halfway. So we've almost come down to retest that actual measured move over here. It looks pretty decent from that perspective. We do have some lower supports indicated by these red lines. So every single line over here, these red lines you can actually see now, these are going to be support levels. So we're looking at 21,150. We're looking at 19,500. Obviously just losing the 28,000 level, and then we do have that resistance chunk between 21,300 and 21,500, which sits up over here. Okay, so currently if we invert the chart, what we saw was a falling wedge structure. We broke out of the falling wedge structure. We're currently retesting this high area over here before we create the next move. So what we're developing over here in terms of a price action structure is more of a horizontal consolidation range now out of our falling wedge structure. So our price action structures, okay, we have that falling wedge we broke out of. Now we're developing a horizontal channel formation, developing over here between that 21,500, 21,300 and 21,000 and 20,800 to 20,600. So the next move towards the downside, guys, we are looking for, if we do lose this local low, we'll be expecting a move right down to 20,200 to 20,120. If we lose that level, we do expect a further collapse. Again, exactly the same thing remains for the upside, guys. For us to see any sort of continuation upwards, we do need to see that daily candle close above this trend line. Now, we're looking for entries for a 4 hour close above. So I'll say it again. I'd be looking for entries on a 4 hour close above but I look for confirmation on a 1 day candle close above, okay? So sometimes you can enter before you get confirmation if you believe the risk tolerance is worth it. In this instance, it will be. I believe a 4-hour candle close above will be good enough for a long entry, but I do not believe we'll get absolute confirmation until we get that daily close above. If we get the daily close above, guys, the next target, very, very obvious. We're looking for the same range we had over here in December 2020, which was this pinch zone before we went onto that first initial explosive leg into the bull market. You can see we had this horizontal channel over here. That takes us to this range over here, which we actually retested quite a fair bit back in August. Moving up from there, guys, we do expect a continuation if we do push through that level, bring up the VRPV. You can see immediately we have a significant drop in historical trading volume, particularly between the ranges of 24,000 onwards up to about 28,000. Now, 28,000 is a very, very key level, and we'll come back and again discuss why $28,000 is so important later in the video. It's, in fact, 28,000 to 30,000 is one of the most important horizontal ranges on the entire Bitcoin chart. Again, we'll come back to that in just a moment, but let's finish up on the short-term time frames. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. Okay, guys, let's finish up with the small time frame and we'll do a technical analysis, because we've defined where we are with the price action. We talked about what levels we expect the price action to go down to if we do reach those levels indicated by those red supports. We'll also talk about what will happen to our decision making if the price action pushes above the resistance. So I've got our plans to both sides. Now we need to talk about the probability that we're going to see one of those 2 scenarios actually play out. So currently we have broken down very straightforward stuff. We're broken down within the next support range. We are starting to see some movement below the small time frame moving averages again, signifying the trend is weakening. On a larger time frame, we are still very much in an uptrend, okay? As soon as we break down to a small time frame, such as a 4-hour, such as a 1 hour, we are now technically within a small, very short term downtrend. We are developing a downtrend. Downtrend, of course, rejection from that range, break out of the rising wedge. We're seeing momentum start to shift negative, which it already has, and we are starting to see the price push into and below some of the smaller time frame moving averages, indicating weakness in the larger time frame trend, again, which can extrapolate and expand to the daily chart if it continues long enough. Okay, so from a daily chart standpoint, we do have the VRPV sitting down at 19,200. We can see immediate chunks in trading volume at around 20,200, which of course is going to be the big test of support. So like we said before, we expect if we do break down from this level, according to the current short-term structures and larger time frame volume ranges, 20,200 is going to be the point of which we do expect a very important support retest to occur. This is of course not only going to be the horizontal range, the range of volume, but also where the 50 EMA is going to converge into. So we're going to be retesting 3 massive points of confluence at once. Losing that 50 EMA on the 4-hour chart, we will confirm the breakdown and shift in RSI that'll be breaking down in conjunction, and that will send the price lower, potentially to retest the 19,500, 19,200 range, and worst case scenario, even lower into our 18,000 range. I think it's unlikely. Now, with that being said, guys, if we are going to bounce, the most probable area to bounce from is as well going to be the 20,200 range, as we do have the most points of confluence at that level. Again, 50 EMA, VRPV on the daily spike, and of course the horizontal support range, which we have outlined by the red line. If we do bounce from that level, we can look for potential longs if we do see reversal candles print for a move towards the upside again. Until then, this downtrend is active. I wouldn't be looking to take positions right now for longs. I'm currently still holding my shorts. I'll be holding my shorts until, again, they go back to break even into this red zone, or they push past and I enter and flip into longs. So the downside, again, very much toward the downside. From a technical standpoint, like we said, momentum is down. Trend is starting to shift and breaking down horizontals. A larger time frame still looks all right. We do have the S&P 500 going down, which is something to concern about. And of course, we are starting to see these momentum shifts on the larger time frame. We've already seen these on a small time frame. We go down to like hourly chart. We can see momentum has been trending down as price action has been trending up. Again, nothing out of the ordinary here, guys. Okay, this is a classic bearish divergence over here. Very classic, very obvious bearish divergence. It's been present for quite some time now. We've seen it on the charts for quite some time now. This shouldn't have come to anyone's surprise that we were going to struggle at this resistance range, and it shouldn't have come to anyone's surprise that we have seen a small time frame drop down from this resistance range. We've been talking about it for days now. It's been very, very obvious. The chart's been telling us. The only question there really is how low is it going to go? We've told you now. The other question is at what point we're going to continue upwards. We've told you now. And the third question is what are the probability that we do continue massively down here? And like I said already, it's a good chance that this move down, this move that we're going to go down any lower, or what if it's already done, is going to be nothing more than a healthy correction in the market before the next move towards upside. So I'm going to leave it there, guys. Let's go ahead and jump into the macro and talk about the 4-year cycle. And if you remember at the start of the video, we talked about why this 28,000 to 30,000 is such a key level. Back to the 4-year cycle, guys. If you see on the 4-year cycle here, you can see some really interesting stuff. And of course, I've marked these levels out by these red horizontal lines on the chart. Now, the red horizontal lines represent the yearly bull market bottoms, okay? The yearly bull market bottoms. So the point at which the bull market found either significant support during or at the end of before a breakdown into what we'll call the last leg of the bear market, okay? So in the 2014 bull market, we saw that point represented by $360. Once we lost that level, we continued into that low, into those lows, printing a nice low, okay? And once we closed the monthly candle above, we actually remained above that level forever. We never actually came back down to close a monthly candle below it. 2018, forward wind, same level as printed, okay? We're looking at $6,000, give or take, 5,800, okay? We closed a candle below, we crashed bear market bottom, okay? Horrible, horrible straight line, bear market bottom. We pushed up, monthly candle over. We never closed a monthly candle back below. We continued to new highs according to our date ranges, okay? So keep these date ranges in mind. Moving forward, that same level, the yearly low, is now in 2021 represented by the price range of $28,000 to $30,000. It sits somewhere in between, okay? $28,000 to $30,000, so say $29,000 as per this chart. Therefore, $28,000 to $30,000 is the most important resistance on the chart in terms of when the bull market will start. The most significant resistance, the strongest resistance, was actually 19,200. If we go back to our chart, 19,200 was actually the strongest resistance we had on the Bitcoin chart. You can see VRPV right over here, huge resistance. Look how big that resistance is compared to closest thing over here was, of course, a 16,800, and then prior to that, the next closest was 8,000. So 19,200 was the largest resistance on a chart, resistance that we absolutely melted. We went right through it, okay? But the most important resistance is still yet to be retested, and that is, of course, 28,000 to 30,000. That is the resistance that is going to either facilitate what we have seen in the past, a bull market, okay, or result in something we haven't seen before, which is an extended bear market. An extended bear market means we push up to retest that yearly low, we fail to push through it, okay, and we continue down, extended bear market, okay. When do I expect a retest of the 30K? Well, I can say if I want to be very, very obvious, I could say it's going to happen before the 24th of April before the 1st of April 2024. And that's very obvious. It's obviously going to happen before that point. But that is when the bull market's going to start. And the bull market technically starts once we break over that line, and more importantly, once we break over the Ichimoku cloud baseline. So if we look at the chart over here, the retest of that yearly low generally occurs a little bit sooner than the retest of the Ichimoku baseline. So we look at the date ranges. I've applied the date ranges based on where we've closed the monthly candle above our Ichimoku cloud baseline, the baseline being this very faint red line you can see going through a chart. But if you look at the yearly lows, we generally break a monthly candle over it quite earlier than what we actually retest the baseline. So it's a later entry. The baseline is a later entry. So in theory, we can expect any sort of break above this line to happen, I would say, within the middle 70% of this range. So we're looking anywhere between March 2023 and I would say December 2023. We can expect a retest and breakthrough, or retest and rejection of the $28,000 to $30,000 raise of Bitcoin, which is either going to result in that continuation in the macro and uptrend in bull market, or of course a rejection and extended bear market, which again, I do not believe is going to happen. I think we're going to follow the 4-year cycle and continue upwards. Anyway, guys, I hope you enjoyed today's video. Let me know what you think. If you do have any questions, leave them down below. Now, if you do want to learn how to trade, we actually do have a course. It's called Become a Trader. You can find it on the Crypto Academy website, which will be a link down below. You can go ahead and send us an email. If you want to learn technical analysis, if you want to learn charting skills, if you want to learn how to trade, trading strategies, you want to learn how to analyze charts, use structural analysis and technical analysis, it's going to be the course for you. I've made sure we've compiled everything you need in there to give you a really good kickstart in the world and realm of technical analysis. It will provide a whole bunch of rules, disciplinary skills, and a whole bunch of examples to develop your skills even further beyond what you're probably capable of doing, which you can go ahead and apply to your own trading and hopefully make some more profit. So go ahead and send an email off, inquire about the course, and we'll send all the information back to you. Have a great day, guys, and we'll see you tomorrow. Cheers.